Yeah, good day, trader. My name is Xauusd FX. Welcome to my YouTube channel. Okay, in today's video, so we'll be talking about the weekend trade recap, but not just the weekend trade recap alone. I will also be looking at a strategy where in which I've once talked about on my YouTube channel. Yeah, I talked about it before, like I think institutional market structure, where I was talking about STH, talking about ITH, intermediate time high, intermediate time low, and talking about short time high, intermediate time high, short time high. Like I'm talking about the patterns whereby we see these kind of structures in um on a higher time frame PDRs. They are always significant, they are always high probability. So I'll be doing the weekend trade recap, and I'll be talking about the strategy also, so that we can actually learn from it and use it as our um, tutorial for this week. I was unable to do video last week. I was just trying to develop a new strategy and look at how things will go and how everything is going to turn up. Though I found a one strategy I'm using now. I think I'm going to talk about it in the future. So for right now, let's look at what we got here. And okay, let me go to my Telegram channel. This is my Telegram channel here. You can see it here, November 26th. So I'm looking at this gold trade here, November 26th. You can see this old gold trade here. That's what I'm looking at. This old trade here. So let's get into the chart. The question now, you know how the question goes when we are talking about the weekend trade recap. Why do we take the trade? What are the strategy, or what are the things, what are the components that comes together that bring up the strategy, and what is the probability of the trade? Why did I feel like the trade works? So that's just everything. And okay, let's start from daily charts. The charts. Okay, this is day chart here, good. So I want to do the top down analysis and see why I entered the trade. Let me start from weekly so that we cannot carry it along. Okay, I see market trade off from this fair value gap here. So market trade off from a fair value gap on a weekly chart. Yeah, you can see this fair value gap that is here. Yeah, market trade up, market traded into it and trade up. So you can see this whole candlesticks that goes up, very majestic, right? So that's the candle I was looking at, the market used to react. Okay, let's go to daily chart. So that particular place, this is weekly fair value gap, right? So when market distributed, like there is a lot of continuous bullish, a lot of high momentum in bullishness, then market creates a new fair value gap here. Okay, so you can see market trade into the fair value gap. So this fair value gap here, that is our point of interest, that is our PDRA, that's the where we want price to deliver from. Okay, so now the next thing is that I go to 1 hour chart straight up. So and I am just looking at this fair value gap here. That's the day chart fair value gap. We all know what the fair value gap means, right? So I can see markets here bearish. So you can see how market is being distributed for bearishness. So the moment market enters into it, we can see a low here. Market create a low here, like market create a low here. The market entered into the fair value gap, come back again, enters into it. Then market break this high. So the moment market break this high, I go to 15 minutes straight. So 15 minutes chart, I was looking at it on 15-minute chart also. So you can see 15-minute chart was a little bit expand. You can see how market, you can see a low here also, where market is being distributed. There's a kind of distribution from the market whereby market is respecting the distribution for bearishness. Then Okay, when market goes up, you can see the market take out this high. So this high that market took out is what they call the market structure shift. So it means that there is a possible shifting in market structure whereby market is changing from bearishness to bullishness. But does that make me my strategy complete? Okay, before I even start, let me show you my strategy that I was trying to talk about. Then if or so we all can be on the same page, right? I want to see this. Okay, this is strategy here. I have a low, I have another low, then market breaks this, come back, it chase, and the moment market breaks, you see, this particular zone here is a PDRA, which means that it is a point of interest where you are looking at for on a on the other time frame. So if market comes like this, goes up, we have a what? Here we have a short time low, then a short time low. What will make this a short time low is when market breaks this high. The moment market break this high, this is a short time low. And if we have two short time low and a lower low in the middle of two short time low, it is called intermediate time low. So the confirmation of this bullishness is the intermediate time low. So this is what we are looking out for. Intermediate time low is what makes that bullishness a very certified one. So this is the whole strategy, which means that I am only waiting for the confirmation of intermediate time low. So which means if I see a short time low beside a lower low, then it means that that bullishness is confirmed. My intermediate time low give me a confidence that this is going to buy, and my stop loss is supposed to be at the short time low here. So that is the strategy I'm talking about here. So let's look at the chart again with that mindset, without what you just see now. Seeing is believing, right? But that's not what the scripture says. You have to have faith and see. Okay, 15-minute chart now. You can see this low here, you can see this lower low. Now when this one breaks the high, when this high is broken, let me zoom out so everybody can see. When this high is broken, market did not take this high, market did not take this low, sorry, this low was not taken. You can see a lower low and a low. So which means that whole bearing, so we call it a core pattern. I don't that's not what we are talking about here. So the moment market break this structure here, that is what give me a confirmation that now I want to be a buyer. So I think, so you can see it here. We have a short time low here, you have a short time low here, and this is what we call the intermediate time low. This is what gives me the confirmation that I want to go bullish. So when I saw this, we have to look for our entry. So my entry is always a fair value gap. So there's a fair value gap here, there's no fair value, it doesn't have a real fair value gap anymore apart from this one. So that is my entry, and we have so stop loss below this short time low. And where can you see market next? You can see market inside this fair value gap, one, or you can see market at this fair value area. So those are the two places you can see market coming up to, and you can see how market hits the take profit. So that is the whole strategy that brings up this whole trade. It is just a short time low plus intermediate time low plus a short time low plus fair value gap. A short time low, intermediate time low, short time low plus fair value gap. That's just what brings it up. So this is the trade here. You can see where we put our entry also. I use a 1 hour fair value gap actually, because I was like, I don't want to miss the trade, because the trade was very real. So I don't know if market is going to come down to 15 minutes fair value gap, because there's a 1 hour fair value gap. So I hope you understand what I'm talking about. When market was going bullish, I want to show you where it took profit. I think it was that same day, right? We had a lot of, you can see how market was going. That's of everything was 350 pips. everything was 350. It was okay. I think I can, okay, this is it. Take profit, it 350. So that's it. Like, share, and subscribe, and don't forget to follow